Carl Wolf, CEO of MamaMancini's, participated in Little Grapevine's May 2020 G1 virtual conference. As part of that conference, we have some follow-up questions from the Little Grapevine Network. Question number 1. During the Little Grapevine conference, you talked about gross margins and said that things like prepared foods might have higher gross margins, but sometimes products with higher gross margins may have higher selling and shipping costs. So you look at contribution margin. Can you please talk about that?
That is correct. Gross margin can be higher with some customers, but there are G&A charges such as promotions, demos, merchandising costs, freight, etc. So we look at what the sale to a specific customer is related to the profit contribution after additional variable expenses such as freight, assembly, merchandising, sales and royalty expense, and rebate marketing fees, as well as demos.
You answered some really good questions about how the relationships with various channels evolved. And it seems to me that the majority of the growth is from expanding locations, and maybe some growth is coming from additional products. Is there a next phase of growth spurt in rolling out to other locations like Costco stores? There could be M&A later, but that is inorganic growth. Please let us know if you have a better sense of what's going on.
Correct. There are many more SKUs we can offer to our existing customers, and we can continue merchandising heavier to get higher volumes out of existing locations. As an example, in Publix, we'll be going into their take-home meals with our meatballs and meatloaf, which can add nice volume to our existing sales to them in the sandwich and prepared foods section, as well as expanding our pasta bowls from 350 locations into 1,250 later this year.
What is the biggest challenge that you faced and still face during the shutdown and the reopening due to the COVID-19? Do you have any idea when we could see your first order in food service?
Food service will not be a major factor until the fall or later. We do have 1 or 2 major chains looking now, but I don't think they are ready to do anything else but hold the line and operate. We have our key food service sales agent ready to go as soon as we are ready to start again in early August. We also have an active convenience store outreach, but that is also on hold with the COVID-19, but that should open up later this summer. The major changes is the time frame we need to get new authorizations or heavier merchandising activities to increase sales. In some cases, it is necessary to change our sales agent representation with our major customers. This has occurred positively with most chains, but there are a few chains left, such as Wegmans and Target, where we still are at home plate. We will continue to pursue maximization of our relationships, and over time we'll close on these customers. In October 2014, we had a major failed offering through BTIG, which would have raised $15 million and was called in the last week. The purpose of the raise was to heavily advertise and brand us in retail packages and in frozen. We were losing $300K per month, and at that time, on purpose to grow sales, and had invested over $500,000 in fees for the offering. We had about $500,000 in cash. We were able to get a major term loan from Manatuck Hill Capital Partners, in December, and I put in personally $700,000 over the next 7 months and moved us to an EBITDA break-even by June of 2015, reducing the deficit each month. We wanted to not destroy our infrastructure for future growth and methodically pared overhead, increased our margins, and cut marketing costs, and we were successful. We have not needed to add any financing to the company since, and we are in a very positive cash position now and appear to be so in the future.
And the last question, do you know how much of your recent business has been driven from COVID-19?
COVID-19 helped club stores business, but set back fresh deli business and our presentations for food service. Overall, it was close to a wash, with slight positive in first quarter. In our press conference on June 15th, we commented on all this.